I'm hearing. The banks are taking everything.
It's a very serious topic, Dave.
But if we go back in time, how many power of sale and receivership deals have you seen
So,
in a year? Quick answer.
well, there was like a little bit during COVID, beginning of COVID, and then there was like 2017, I think.
And,
there
and
was
when
a
you
weird
saw
bubble
them,
thing.
it was like a big deal. So
there
before
was
we
like
go,
one, right? And you're like, holy
it was a big
smokes,
deal. You'd
yeah.
all talk about it. So
Yeah.
maybe before we dive into that, let's roll back receivership,
Yeah.
power of sale.
Yeah.
What does that even mean? What are they?
Yeah, good question. So, and it's like, I think that's important for everybody to know right now because there's potential opportunity and potential risk that comes along with that,
Yeah.
right? So, okay, so power of sale. Let's start with power of sale. It's the lesser of the two. So, power of sale is the right that a lender has over the property to basically sell it.
Right.
So, how that would work essentially, if Dave, you're the lender, I own a property, and I can't make my mortgage payments. All right, so I go 1 month without paying. Dave calls me, says, "Hey, what's going on?" Right, 2 months, 3 months, usually around that 3 month mark, and it's actually in your contracts. They will say like when you're technically you're in default fully, and they can sell it. Then they have the right to power of sale the property, so they can call a realtor, send you your notice, and go list the property for sale.
Yep.
Now, with the power of sale, through the whole process, start, finish, listing, up to the point of closing, as the owner of the property, I can actually come make my payments up and then take control over that again and cancel the sale.
Even if I, as a buyer, am firm.
Correct.
And it's the day before close.
Yes. Yes. Now, each of them are going to have their own nuances. If you're looking at a power of sale, there will always be, or there should always be, a power of sale schedule that's attached to the listing. So if you're a realtor, you can, usually it's right in the tab link, you click it and it's there. If you're a buyer, ask your realtor, ask the sellers, get a copy of that, because that's good to review up front. That's going to have all the terms and conditions set out in there. So I recently, just to keep things simple, I did a residential power of sale for my brother-in-law. And in there, that schedule superseded the entire contract.
Yep.
Right.
Yep.
So I could have put whatever I wanted in that contract. It didn't really matter because at the end of the day, the schedule superseded it. And that schedule basically was saying the house is as is, where is. They're not repping absolutely anything. You're going to close. When you close, it's yours. That's it.
Yep.
And have a good day.
And up to including the day of close.
If I wanted to come back in
mortgage.
and basically make my mortgage payments up, then it's my property again.
Yep.
Right. So that's kind of power of sale in a nutshell. The next level to that is what they call a receivership. And a receivership is actually a legal process. So they go through the courts. The lender will appoint a receiver, or the courts will appoint a receiver, who is essentially, it's a company that's going to be overseeing the sale of the property. You're seeing that a lot more in today's day, I find, because there's less rights for the owner of the property.
Yeah.
Right? Once the courts award the receivership, I don't have a right to come in and make up my mortgage payments anymore. I'd actually have to offer on the property, like everybody else, to buy that property back and then close on it and do all that again.
Yeah.
Personally, why I think we're seeing a lot of receiverships is because receiverships, they will manage the debt stack scenario, meaning if there's a first, second, third mortgage with a power of sale, that second and third mortgage have the right to kind of add their 2 cents, get involved. If they feel the house wasn't sold for enough, they can actually come and sue the bank that's power of selling the property. So if it's a quick thing, so with residential, we usually see power of sale, right? That's what I've been seeing across the board. However, with commercial, we tend to see receiverships. It's cleaner. It's just they take it and they run with it. But yeah, again, they'll run a bid process. The outcomes are the same. It's the lender taking the property to sell it and recoup as much capital as possible.
And as we see, how do you feel that's impacted the market in general, and how do you feel that, if at all, is impacted over the last couple of months?
Yeah, so we're seeing probably, 3 or 4
It's a good
power
amount.
sales receiverships a day. Like we
Yeah.
get these consistently sent to us saying, hey, take a look at this. It's receivership, it's power of sale. So it's interesting because if you asked me this question 6 months ago, a year ago, I would have said it's absolutely affecting the market.
Yep.
Right? Because we're seeing receiverships and there's no, they're distressed sales. We can't use distressed sales as market comps. That's appraiser 101 stuff,
Yeah,
right?
yeah.
Learned that in real estate school. You got to use honest sales. You can't use arm length sales and you can't use distressed sales because the values are skewed because of those reasons. Well, the problem is that that's all we have.
There's a lot of those, yeah.
Right? A lot of the data is distressed sales. It's power sales, it's receiverships, it's et cetera. So how is this affecting the market is I think it's almost not at this point, if that's a fair thing to say.
It's so interesting. So I asked you that question under the context that I had the exact same answer, and we didn't preamble this. When the market was at a higher point, you'd have, 250 a unit, and then the receivership would come out and it sold for 200 a unit.
Right. Well, people would take advantage of the fact that it's a receivership.
It was a receivership. And those were less frequent at the time. So you were seeing the people that were doing it were ones that are a little bit more seasoned and were jumping at it. The market has sort of hit a point where we've seen enough of them that, everything sort of pulled to that point where now we're seeing receivership or not. There's always a gap because there's some inherent risk. Like you said, no reps and warranties, as is whereas. But that aside, the gap between them is sort of diminished and tightened so much that it's almost like it set the benchmark of value, and that's effectively what we've seen now going forward. So I agree. It doesn't seem to impact it anymore, and perhaps it's because we've seen enough of them.
Yeah.
People aren't scared by them, intimidated by them. We've had these conversations, and people are ready to transact. I mean, we're doing a receivership sub 20 units. A year ago, I would have said that would, I don't know who would buy that because it's, the larger groups, those guys are fine to go receivership. They have the money, they have the stripes and education in it. A 10 unit, you would think you wouldn't get much traction because it's an intimidating process, and typically people buying a 10 unit are a little bit newer. Not the case.
Yeah.
People are doing it. They've become desensitized to powers of sale.
It's a good word for it. Yeah. Because, and that's, and again, right, like to mirror your point, yes, there is going to be a little bit of a delta between a receivership and a honest sale, but again, there's so many of them, right? So it's like you almost have to start using that data as part of your comparables.
Yeah, it's interesting to watch like an ecosystem. This is a bit weird of a tangent, but like you watch it sort of crumble in an area and it almost sort of stabilizes itself and heals itself in this area. So now we're just at this level where it's not really impacting it. People are still going forward. So as I watch, if you read the headlines, powers of sale, receivership, they're going up. If you read that as a standalone, it makes you feel that oh my gosh, like it's collapsing.
Right.
But then you realize to get into the weeds and go, there are more, but the values have sort of stabilized because there's enough money and enough people wanting to get in that they're buying.
Yeah.
And
which is a good segue into the next thing I wanted to bring up, which is just, again, we're talking market update today, right? Yeah. We started off with the big sensationist, theme.
Don't you say clickbait? Don't you do it?
It's not clickbait. We never do clickbait, Dave. But the market in general, right? As a realtor, every time you go into a family gathering or meet somebody new or talk to somebody, as soon as you say, "Hey, I'm a commercial realtor," they go, "How's the market?"
Oh,
What does that mean? Right? How is the market, Dave?
How is it? Well,
right? So I just wanted to touch on that briefly, right? And
it is why I love multifamily. The ecosystem theory, right? So as we watch, prices come down and the larger groups are out and they're saying, "Hey, don't show me anything that's less than 100 units." Okay. Now they want to buy more and more. So they're showing 60 units. They're buying 50, 40 units because those people are long-term. They recognize, hey, is it the bottom? Who the heck knows? But when we zoom out 10 years, we're going to be in a really good spot. We see a ton of that. And so how is the market? Yes, there's more power sale. Yes, there's more receivership. We saw a pretty good solid pullback where deals are really making a lot of sense. And honestly, right now, I know you're the same. Like we're busier than I think I've ever been at this time of year. If when I look back. So how is the market? I'd say it's doing really well from a transition, like buying and selling. There's a lot going on. We're seeing good deals. It's not like we're phoning people and they're going, I'm out of the market.
Yeah.
Like we're phoning people, and we actually have a lot more buyers at a 20 unit building than ever before.
Yep. Yep. I think buyers are being more selective.
For sure.
Right.
And they can be.
And so what we're seeing is when there's good product on the market, it gets purchased quickly.
We've seen several multiple offers on buildings. Like that is not uncommon right now. You know, the listing price is good. There's multiple offers on it.
Yeah. So to answer that question, how's the market, right? And when I get that question, I say, well, the market's extremely busy. So don't let anybody tell you otherwise, right?
Good answer.
And even on the res side, speaking with some of our residential colleagues, like they've said the same thing, right? They say we're actually very busy right now. Buyers are picky. They want good value. They're not going to settle. They're not going to overpay. They're going to pay exactly what they feel the building's worth. And everybody's, in my opinion at least, like I find people are moving a little slower because they're being more meticulous about their underwriting, about their due diligence, about this, about that. But it's not like we're sitting here twiddling our thumbs going,
Begging
oh my gosh,
people
there's
to
nothing
buy.
selling. Like there is a lot selling. So in terms of how's the market, I think the market's doing very well for what it is, for the economy we're in. How are property values? Very different conversation, right? How is the market for you as a seller is a very different conversation than how is it for a buyer.
Yeah, if you hit the value 2 years ago in comparison to now, you know, it's not good. But, you know, my clients, you hear me, you know, this is the most excited I've been for a while because I truly, truly believe we're buying under the context of how the deals are today with very good underwriting that's built in a lot of cushion. So we do that. When our clients are doing these deals, I'm very excited because you're buying a very good quality asset. It hits your metrics for the long term.
Right.
Maybe in 2 years, maybe we're not up 3 years, 5 years. At some point when we zoom out, you're going to be in a really good spot. And the value of the building along the way when you've bought it 80, 85% on a deal, loan to value on a deal that has good quality cash flow and lift in it, that's hard not to make sense. And that's why the bigger guys are coming down because they can't buy enough 100 units at that.
Right.
So they're changing their metric to buy more deals right now because they want to absorb as much of this as they can. So as an agent, it's great. As a buyer, it's great. As a seller, if you looked at it 2 years ago, it's not great.
No.
You know, that's why a lot of people aren't selling.
Yeah.
And I think the idea here is, there's a lot of really good quality deals, a lot of good opportunities. So, how's the market? I guess it sort of depends what side of the fence you're on, but things are pretty good. So,
Love it. Anything else?
nope, like, subscribe, hit the bell if you have questions.
Just the usual stuff.
Just the usual, We've got some really good off-market deals coming out in the next little while, and I think we've seen a bit of a gravitation again back towards off-market. So, we'd love to have a call with you. If you have a building, you want us to give you a sense of its value, even if you don't want to sell, let us know. We're happy to do those. I love those calls as well. So thanks for sticking around.
Thanks, guys.